Moving your mom or your dad or yourself isn't just about moving things from one place to another. It is much more complicated than that, as are so many things having to do with later life. How to Move Your Mom and Still Be on Speaking Terms Afterward provides in-depth conversations with professionals, older adults, and their family members who share their stories with warmth, understanding, and humor. I'm your host, Marty Stevens-Heebner, and here you'll find answers to many of your questions, as well as different perspectives that I hope will inform and inspire you. We've all heard about reverse mortgages, but they're really a kind of a mystery. I don't know about you, but they certainly are for me. So keep listening because I have an expert who has all the answers. Welcome, Janice Cohen. I'm so honored to have you on as a guest.
Thank you, Marty. It's great to be here with you.
You are such an expert at this. Let me tell you a little something about Janice. Janice Cohen works with Mutual of Omaha as a reverse mortgage specialist with 17 years experience. Talk about a veteran in her field. And her approach to reverse mortgages is really unique because she doesn't just think about it as a transaction. She really approaches it from a life planning perspective. What's your favorite memory of your grandparents?
Oh, I had a wonderful, brilliant grandfather. We lived in New York City and he lived in our neighborhood, and he would come over every Sunday and take me to the playground. He just had boundless patience and he had boundless energy for us as children. Those walks to and from the playground are forever in my soul. He always had a passion to make the world a better place, or to help people feel embraced, or to help them feel included. Every kind of person. I'm Jewish. We used to have a Passover Seder every year at my grandparents' house, and he invited every type of person. He wanted to share our traditions. He wanted to share the amazing foods that we would eat on Passover, and he wanted to open his home. He was just a magnificent human being.
What a wonderful person to have had in your life. And that kindness and playfulness, you inherited that because that's the kind of person you are in a beautiful way.
I hope so.
So you often become part of a team.
Most of my business comes to me from trusted advisors who have very long-term relationships with the people who end up being my clients. I feel even more of a responsibility to evaluate if this is truly the right program for the right candidate. There have been clients who've been referred to me who I have felt were not a good fit for a reverse mortgage. And I've told them that, and I've told their financial planner or their estate planning attorney that I felt that way and why. Just to give you an idea, there was a real estate attorney who called me one day and said, I have a neighbor and she's been receiving phone calls from a reverse mortgage advisor. She already has a reverse mortgage, and I would really appreciate it if you would just look at her most recent statement. And I looked at this statement and I noticed that this reverse mortgage was from quite a while ago. And this lady's line of credit had grown to over $1 million.
How?
She had done it, I think, in the 90s. And a reverse mortgage line of credit grows at the same rate that borrowed money is charged interest. And this lady was now in her 90s, and her rate was very low. We had a conference call, the real estate attorney, her neighbor, and I said, Anne, what you have, you should never change. And she said, that is so odd. This gentleman, this reverse mortgage specialist, has been calling and coming to my home. He brought over a dinner for me. I asked her for his contact information. And with her on the phone, I placed a call. And I said, hi, I'm Janice Cohen. I'm calling with Anne on the other line. She shared with me that you are talking with her about doing a refinance of her reverse mortgage.
And I can imagine the look on that guy's face on the other end of the line.
I didn't even tell him that I'm a reverse mortgage specialist. I said, I'm just curious, what is the benefit that she will get from doing a refinance of her reverse mortgage? And he said, well, she'll get a much larger line of credit. And I said, she's in her 90s. She has $1 million line of credit. The rate will be higher. And then he fumble, and thank you for calling. Take care. I won't bother you anymore. Once I got behind Anne and said, hey, what are you doing? Then he left her alone. I think it was not in the best interest of Anne.
It was in his interest, that's for sure.
It was in his best interest.
Mm-hmm.
And I don't think about what's best for me. It's the way I earn my living, but still, I think about what's best for my client. I would never try to complete a reverse mortgage for someone for whom it was not appropriate.
You wouldn't push it.
No.
And
no.
that's why there's an award named after you.
Yes, there
The
is.
Janice Cohen Award. You were the first recipient. And it's unique in that you have to be both tops in bringing in clients.
Yes.
And customer service.
Yes, I'm a top producer at my company. Yes, I have top customer service scores, and I take a lot of pride in both of those things. But I came on board my company as the very first loan officer, and my CEO always said to me, Janice, it all started with you. This was a leap of faith on your part. And I helped to inspire other top producing loan officers to come over to our new company, which they did in droves.
And you're good at making things happen when it's the right fit for your client. Let's discuss the basics. What is a reverse mortgage?
A reverse mortgage is a tool that allows a senior to borrow approximately 50% of the appraised value of their home in tax-free money. So there are no taxes charged on loan proceeds, and there are no payments that are ever expected or required. Once you borrow reverse mortgage funds, you can be receiving money. You can have a line of credit to draw from in the future, but there are no repayments that would need to be made. I'm under the age of 62. I have a regular mortgage. I have to make payments. Anyone who's not old enough to do a reverse mortgage has to make payments on a mortgage. That's how it works. But on a reverse mortgage, there are no payments expected or required. And yet, if you want to make payments, you can do that. Otherwise, your loan balance is going to grow over time. Imagine if you had a mortgage and each month you have the option, should I make a payment or should I not make a payment?
Do you have to keep up insurance or maintenance?
You must have homeowners insurance and you must pay your taxes in a timely manner. You must maintain your house. We don't look in the windows to see if the house is maintained, but here's what can happen. Let's say your house is not maintained and a neighbor sees that the foliage in the backyard is overgrown. They see vermin, rodents, they're going to call the city, and that complaint is going to get back to the mortgage company. So things need to be kept in a good state of maintenance.
As people get older, it's harder to maintain those things. With a reverse mortgage, could they draw money out to pay a gardener or a landscaper or something like that?
Absolutely. A lot of people will calculate how much they need per month to make their lives manageable, easier. And then they can receive that amount monthly in order to pay for these services.
That's wonderful. Do your clients also sometimes use them for aging in place modifications like stair lifts and ramps, grab bars?
Absolutely. My clients are people who want to remain in their homes for the rest of their lives generally.
I'm sure people are wondering, can I get a reverse mortgage and live elsewhere?
You cannot. A reverse mortgage is designed for your primary residence. Having said that, clients in New Jersey will sometimes spend the winter in Florida. And that's never a problem to do that, because if New Jersey is going to continue to be your primary residence, you can spend half of your year wherever you'd like, as long as your driver's license is New Jersey, your social security information is linked to a New Jersey address. These are the things that make the state in which your home is located your primary residence. If you live in your home half the year, but you claim a homestead exemption in another state, you have credit cards linked to another address, you have a driver's license from another state, that's not going to work.
You're not really a resident there.
Everything should be uniform and linked to the home that is your primary residence.
The residence you've used to take out the reverse mortgage, in other words.
Precisely.
Speaking of New Jersey, I believe you were a cantor there for how many years with your beautiful singing voice and everything?
25 years. I was a cantor in a Reformed synagogue in New Jersey. And now I'm here in beautiful Los Angeles.
And you bring all that love for your congregation to your work now.
The love that I have and have always had for my community is what led me to do what I'm doing. I'm truly invested in the benefit that this program is having on my clients. I want them to feel not only are they happy, but they would shout it from the highest mountain that this reverse mortgage made their lives better.
Your business has really boomed through the COVID crisis, and I bet reverse mortgages were a lifeline for some people.
The fact that I became as busy as I did during COVID was a big surprise to me. And I thought, okay, when someone is in his or her own home, they can control who comes in and who comes out. And it is going to make life more manageable for that person during a pandemic, which, let's face it, highly unusual sets of circumstances. But I was happy to be able to provide that for people.
What do you find is the biggest sticking point for people?
That's a very interesting question. Sometimes a person will say to me, I want to be able to leave an inheritance for my children. And I say, you may not leave them a paid off house, but they're going to be able to leave a legacy to their children. But I want to tell you something that you might find surprising. The vast majority of the time, it's the children who are calling me to do the reverse mortgage for the purpose of getting care for their parents. Interestingly, I get the phone call from the wealthiest child. Why the wealthiest child? You have the son who's, let's say, a CEO of a company. He'll say, I love my brother and my sister. I've been giving my parents money every month, but the time has come for us to share equitably in the care of my parents. My feeling is that I am currently funding my siblings' inheritance by giving my mother money every month that I will not see in the event that something happens to her. And we are all accepting equal responsibility if we do the reverse mortgage for my parents.
That makes so much sense. In Los Angeles, we have a saying, cash poor, house rich. Because, for example, there's an area called Calabasas. And 30 years ago, that was farm country. Now it's where the Kardashians live. So if you paid $50,000 for a house in the 80s, it's now worth millions. When you're putting together a reverse mortgage, is it the current appraisal that's used for what amount they get or something else?
It's a very interesting question, Marty. I do a lot of reverse mortgages in Calabasas, in Beverly Hills, and my clients all bought their homes in the 70s, 80s for less than $100,000 in some cases. But if a person has a home for which they paid $100,000 and it's now worth $5 million, if they sell that home, they are going to have close to $1 million in long-term capital gains taxes.
Wow.
It's a huge chunk. A home is a highly appreciated asset. There is a law that says if you own a home jointly with a spouse and that spouse passes away, the surviving spouse gets what's called a step up in basis upon death. What that means is once one of you passes away, you are no longer subject to long-term capital gains. You get a step up in basis upon death. I'm working with a couple right now who paid a couple of $100,000 for their home. It is now worth $3.7 million. And they are trying to plan the next 2 years. He is not well, but they're hoping he's going to recuperate. They're saying, we want to be here while we're together. If something happens to one of us, we'll get the step up in basis, so we won't be subject to long-term capital gains anymore. And that is when the surviving spouse will sell. It's very important information for tax planning.
Yes,
People
it is.
will often list their home, not realizing that they will be subject to long-term capital gains. But if they wait until one of them passes away, then they will not be subject to long-term capital gains.
That is so important.
I have several different programs that I offer, and this program that I'm discussing with them is a low-cost, higher interest rate program. They have a very large mortgage to pay off. It's about $1.8 million mortgage. We are going to get that mortgage paid off for them. If they decide that they want to remain in the house for the next 5 years or 10 years, they certainly can do that. No payments will ever be expected from them, which is really nice because right now they are scraping together money every month to make their mortgage payments.
Imagine if suddenly that mortgage payment every month just goes away.
Right.
That can make such a huge difference to have those thousands still in your bank account each month.
And for a lot of people, that's all they need. They're not looking for a big influx of cash. They just want to stem the flow of money every month.
Reverse mortgages used to have such a bad rap. Why was that? And what was the shift that happened?
Back when I began doing reverse mortgages in 2005, if a person had a pulse, I could do a reverse mortgage for them. In 2013, the Department of Housing and Urban Development came out with the Reverse Mortgage Enhancement Act. It was a refined approach to reverse mortgages. To be quite honest, it pulled back some of the money that we lend because we used to lend a much greater percentage of the home value than we do now.
Still, 50% is huge.
50% is huge, but it used to be much more. In the past, we did not do a financial underwrite of each borrower to see if they had a history of willingness and capacity to make payments in a timely manner on their taxes, their homeowners insurance, and their credit cards.
You need to make sure that they have a solid credit report.
Exactly. And that used to not be the case. Now, mind you, if there are some derogatories on a credit report, we can usually write a letter that would explain extenuating circumstances, loss of a job, an illness, death of a spouse. These are all legitimate extenuating circumstances.
Here's a really important question. After you pass away or after you move out, what happens with that loan balance from the reverse mortgage?
Once the person leaves the house permanently is when the loan becomes due and payable. At the time of the application, we collect from our borrower who is the person that they would like to have settle their estate. What is that person's address? What is that person's phone number? That person, however, has to be an authorized person to whom we can speak. And that authorization has to be made clear in their trust. Anyone out there whose home is not in a trust really needs to reconsider getting a trust prepared and putting the house in the trust, because the trust specifies who is authorized on your behalf to communicate with lenders, with tax collectors, with the insurance agency, and a realtor. Let's say you want your house to be sold. If the house is not in a trust and they don't have a specific person who's authorized that they can be dealing with, the house has to go through probate. A big problem can occur with reverse mortgages when no one has the authority to communicate with the lender, communicate with a realtor, and the house has to go through probate. That can take months. And upon the death of the borrower is when the loan becomes due and payable. And the family has to make sure that the loan is repaid. They can apply for an extension, but 6 months is the initial time frame. And it is a far superior position to have that trust and say, we want to sell, here's our realtor, you'll have your money back within 3 months when the house is sold. Sometimes one of the children will say, I want to keep this house as my own, in which case that child will apply for a traditional mortgage in their own name, and they will use the proceeds from that mortgage to extinguish the reverse mortgage.
Back to your client who got her reverse mortgage in the 90s and it's now worth $1 million. Because I think on average, it increases like 3% per year, more or less.
Just about.
So compound interest. Now, I'm assuming this woman lived in Southern California.
She's in Malibu.
So very high value, bought for not much money, comparatively speaking. Her beneficiaries would have no problem. But, in other parts of the country, the prices haven't gone up so much. In some place where it hasn't inflated so much, or in some cases deflated the price of the home, that would be really difficult for the family to pay off, wouldn't it?
I did Gladys's reverse mortgage in New Jersey. She was one of my first clients. It was like 17 years ago. I get a phone call about 2 months ago. Hi, Janice. I don't know if you remember your client, Gladys Smith. I'm her nephew. I said, oh, yes. How is she doing? She's not doing well. She's in hospice, and we don't have enough money to take care of her. But she never used the reverse mortgage proceeds. And now the line of credit that she had on the reverse mortgage is much larger than the value of her home. I said, Gladys's nephew, get on the phone tomorrow with the servicer of the reverse mortgage and tell them you want every penny of the available line of credit. You want it all in cash in Gladys's account, every penny of it, because it's hers to take and the house is worth less than what's available. So now why, you would ask, why is she telling you to take out the money when the house is not even worth what's available in the line of credit? And I'll tell you, a reverse mortgage is a non-recourse loan. Non-recourse means that heirs are not going to be on the hook to repay anything above and beyond whatever the house can be sold for. So Gladys's house, once she's been removed from the house feet first, which is what my father always used to say about how he wanted to leave his house.
It's true.
He did. He succeeded. At the time that Gladys is taken out of the house will be listed for sale and the reverse mortgage will be satisfied through the proceeds of the sale, even if the proceeds are lower than the balance on the mortgage. Whatever the house will sell for will satisfy the reverse mortgage.
That's remarkable.
It is. Heirs are never on the hook to repay anything above and beyond what they can sell the house for. And if the value of the house is higher than what's owed on the reverse mortgage will be satisfied, and anything above and beyond the satisfaction of the mortgage goes to the heirs. So I was happy for them. I said, you have a little nest egg here. Take it all out, put it in Gladys's account, use it for her care. And when she's done needing care, that will go to you.
Who says that to their client?
I probably shouldn't have said it, but I wanted to remind them that it is a non-recourse loan.
That is your big heart. That is coming at it from a people perspective.
I care more about these families than I care about a hedge fund on Wall Street.
Thank you.
So sue me.
I've heard you use the term hairy loan. What is a hairy loan?
Oh my gosh, I'm the queen of the hairy loan. Did you ever find a piece of taffy on the street and it's got hair stuck to it? It's got dirt stuck to it.
We find that in houses.
Sometimes I feel like this is representative of some of my loans. Now, I do very complex loans because many of my loans come from estate planning attorneys and probate litigators. So there are issues associated with my loans very often to start out with. Conservatorships, powers of attorney requiring doctor's letters, feuding beneficiaries, feuding trustees, just unbelievable messes that I get involved with for the benefit of the person who's being fought over, or usually it's their money that's being fought over. I'll give you an example that I'm working on right now. Borrower bought the property from an individual 20 years ago who did a seller carryback. So he financed the purchase of the house. He was the bank for them. They paid off the seller, but the seller never filed a release, noting that the loan was paid in full. So this, of course, is told to me by the escrow company. I'm like, oh my God, this guy, if he's still alive, is 97 years old. Well, through an amazing effort, we located the son of this man who is authorized to sign a release saying that the mortgage has been paid in full. Had we not located him, we would have had to have our borrower purchase a bond that if anyone came after her for this money, she could say, here, I have this bond. It's an insurance policy to make sure that this money would be paid by the bond company if someone came after her. But meanwhile, we located the son. He's going to sign the release. End of story. Happy, happy ending.
Oh, phew.
That's one hairy loan.
I'm learning so much today. What's the favorite part of your job?
My favorite part of my job is getting a client to the finish line, calling them and saying, we're clear to close. When are you available for the notary? It's the best feeling because a lot of my clients are not accustomed to having as deep an examination for the purpose of getting a mortgage as we are doing. And it's not just us. All lenders nowadays are doing a very deep examination of their clients. There are a lot of hoops to jump through. And these are people in many cases who have not borrowed money in decades. They're saying, oh my God, I can't believe how in-depth this is. And so when we get to the end, I can't believe you're finally calling me and telling me that we're clear to close. I didn't think this day was ever going to come.
And I'm sure it drags on probably for a couple of months.
When people say, how long is this going to take? And I say, it could be 6 to 8 weeks. What? 6 to 8 weeks? They think it shouldn't take more than 3 to 4 weeks. These higher value homes here in LA with title that hasn't been looked at in 40 or 50 years, it can take longer.
Because they're being thorough. We don't want another 2008 crash.
We certainly don't. Speaking of the 2008 crash, a lender or a broker now has to go through an appraisal management company. I, as the mortgage consultant, cannot know who the appraiser is, and I can't communicate with the appraiser. When someone calls me and says, I'm not happy with my appraisal, I have absolutely nothing to do with your appraisal.
It's not just from the outside that they appraise it. They have to be able to get into your home or at least past the front door. And we work together dealing with a hoarding situation.
Yes.
And the appraiser just couldn't get in to appraise the home.
A hoarding situation is considered a health and safety risk. That house had piles and piles of papers that would have gone up like a tinderbox if that house caught fire.
People don't realize that newspapers, as they decompose, can spontaneously combust. It's so dangerous. But we got it done. We got it done, got it appraised.
Thank goodness.
And how do you feel as you're going through these journeys with the clients, especially when you work with older adults who are in their 80s, sometimes 90s? I know that you feel emotions strongly.
I do. I have had instances where I've woken up at 4:30 in the morning ruminating over a situation with a client. I think we all do that. It is an emotional roller coaster. Sometimes I'm working on a reverse mortgage and the borrower with whom I'm working passes away. That's happened a number of times.
It's very sad.
It is.
It's just very sad. It's lovely that you're there for them because I'm sure sometimes there are some really long phone calls.
There sometimes are, but I tell you, I'm very grateful to the people who call me on behalf of their clients to do the reverse mortgage.
You care so much about your clients and you just care about people in general. I'm sure you go on this emotional journey with your clients, and also your clients must go on their own emotional journey. Can you describe what that's like?
I'll tell you an interesting story. When I lived in New Jersey, I had a lead. His name was Marvin. And I spoke to Marvin every few months. And Marvin said, Janice, my future is uncertain. My wife is very ill. I want to wait and see what's going to happen because I just don't know where I see myself if something happens to her. I said, that makes sense. Don't lock yourself into anything until you know what your future looks like. After about a year, Marvin's wife passed away, and he was a champ. He took care of her. He made sure she got the care she needed. He kept her at home. Family surrounded her. He was really good. I'd give him a call periodically. A year and a half later, I get a phone call from Marvin. He says, Janice, you're never going to believe it. I met a woman. Her name is Judy, and I think I'm going to ask her to marry me. Of course, she said yes, because Marvin is a doll. And they applied jointly for the reverse mortgage. He said, I want her to be the beneficiary of everything I have, which is mostly the house, a little house in Toms River, New Jersey. I did the mortgage for him. A year later, I get a phone call from Judy. Janice, Marvin passed away. And of course, it was sad. And I said, Judy, that house is yours to live in for the rest of your life. Talk about ups and downs with Marvin and Judy and his late wife. He saw that his life was in a state of flux, and it was not the right time to make a decision that could have permanent implications for his life. And a reverse mortgage can have permanent implications. So it's good that he waited.
Thank you so much, Janice. You're just always great to talk to. You explain things so well.
Thank you so much for having me on your podcast, Marty.
Thank you so much for listening to How to Move Your Mom and Still Be on Speaking Terms Afterward. Please visit howtomoveyourmom.com for more information about this episode and for additional podcast episodes featuring other extraordinary guests and conversations. Until next time, this is your very grateful host, Marty Stevens-Huebner.